All right, here's the last one, April 5th. Hopefully everything works okay because my hands are sweating since I'm in the sauna. These are the trade alerts, and if you want to enroll in the 7-day trial, it's only $19. You can visit beststockstrategy.com/memberships. That's beststockstrategy.com/memberships. And let's go through the trade alerts. So April 5th, S&P is up 30, Tesla is up 40. Here I closed out this position. The original, I held it for less than a week and captured 60% of the premium. Here I opened up Square, B plus grade, picked up 57 cents per contract, so $228 in total. S&P up 58, VIX up 3.5%, VVIX down slightly. I'm surprised that the VIX was up. You know, usually when you have a divergence where you have a large up day with the market, where the S&P is up 58 points, to see the VIX up, it's a little bit of a red flag. Amazon up 2%, Tesla up 4.4%. April 6th, the market's relatively flat. MA is a decent opportunity. Amazon, new opening trade, picked up $800 of premium, high B grade, not great, but there really aren't that many opportunities at the moment. I'm thinking about being more aggressive and selling calls. Closing trade on Apple. My phone didn't send a notification. Here's the original, so we sold it for 72 and we bought it back for 35. S&P down 4, volatility mixed and relatively stable, not much movement in any of the stocks we followed today. Good day for us as our Tesla and Amazon positions get closer to expiration. April 7th, the S&P is up slightly, volatility is down slightly. I don't see any amazing opportunities. See, patience is really important. You have to be patient because if you trade when you shouldn't, it's very easy to make a lot of mistakes, especially when volatility is declining, because when volatility is declining, then a lot of people get lulled into a sense of the market's going to continue going up and everything's going to be fine. And then you just get hit with a rapid volatility expansion event and it just throws everything into whack and all your existing positions end up getting challenged. So there is a potential trade in Zoom. I didn't make that. It's only a B grade. New opening trade in Tesla. So I sold a spread because the VIX is under 20. I sold the 560 and then bought the 520. Amazon closing trade, bought it back for 98 cents. The original is there. Sold for about $1,000 and bought it back for around 300. S&P up 6, VIX down 5%. VVIX down 2%, VIX at 17. April 8th, bought back PayPal, closing trade for 50 cents. And I sold it for $1.27. Closing trade on Square for 26 cents. Picked up around 50% profit there. Fiverr, closed it for $1.15. We sold it for $600 of total credit and bought it back for $230. Okay, so now I only have positions on Amazon and Tesla at the moment. So I only have 2 underlyings that I have positions on in my entire account. And we have a lot of Amazon and Tesla contracts expiring within the next days, within the next 8 days rather. Tesla, bought it back for 35 cents. Closing trade on the top, original on the bottom. So 50% profit, a little bit more than that. Closed for 50% profit in one day. S&P up 17, VIX down 1%, VVIX up almost 4%. That's a divergence, and volatility tells me that there isn't much long-term conviction in this run-up. Amazon up 20, Tesla up 13. Close out a bunch of positions for large profits. April 9th, so new opening position in Boeing. Tesla, you can see that I rolled it from June to May. I bought back the 550, then I rolled it back, or rather I rolled it in by about 3 weeks and increased the strike price by $10, and then I financed it by selling a May 7th, actually 3 May 7th expirations of 510, 470. And this filled for 60 cents. 2 new trades, one with Tesla and one with BA. BA is a high B grade, Tesla is a low B minus, so I really didn't have any conviction in that trade. For Tesla, if I didn't have the June put to close and then to roll to May, I would have sold the 510, 470 puts, right? In this case, I just decided to use the majority of the premium for the 510, 470 to reduce the expiration from June to May. Fiverr, new opening trade, picked up 53 cents. We have some Amazon and Tesla positions expiring today. Let's see how the market is acting later on. Perhaps we can open more new trades later if the market accommodates us. S&P up almost 32, VIX is down, VVIX up slightly, VIX below 17, Amazon up 73. Amazon has been incredibly strong this week, Tesla down 7. So this was a really good week for the market. This was another profitable week for us as well. April 12th, S&P is down, VIX is up almost 5%, Tesla is up around 10. It'd be great if there was a pullback. If not, we will still open new positions. Let's wait and see if we can get a better entry. I'm looking at Shop, Boeing, and Fiverr. None of these are good trades. They're B grades, but I'll see how they're acting later today, and we'll probably open a new trade in one of them. Shop, new opening trade for 95 cents. B grade. I probably wouldn't make this trade if I didn't have the alerts. Sometimes I feel pressure to be more active than I would like. Yeah, I mean, that's true. And this is one of those times. Will this make money? Probably. But yeah, it wasn't really a great trade. But it's still only a B grade, which is pretty low. Even so, VIX is 17, market is close to highs. There aren't going to be many opportunities unless you want to sell calls, which we do as well. S&P down slightly, Tesla up 25. Profitable day for us as our Tesla positions continue to show profit. We have Amazon positions that will expire this Friday too. Good opening, market is flat, volatility is up slightly, tech is up, Amazon and Tesla up a lot. Our shop trade from yesterday is up nicely. New opening trade in Airbnb, high B grade. Also important, I got a bad fill. I should have tried to submit it for a credit of $1 and then moved it down by 5 cents. I think if I submitted it now, then it will get filled at 95 cents. I should have set my limit credit order higher. Yeah, that's the problem with some of these underlyings that aren't extremely liquid. When they have a wide bid-ask spread differential, then you have to be extremely diligent in submitting your limit orders so that you get good fills. In this situation, I probably could have got filled at 95 cents, but because it wasn't extremely liquid markets and the markets aren't extremely deep in Airbnb, then I kind of got an inferior fill than usual. Tesla sold a call option, picked up $1. B plus grade, I'm only making this grade because it doesn't use up any extra buying power since I have a lot of existing Tesla puts. Would I make this trade if I didn't have existing Tesla puts? No, Tesla is up over 10% in 2 days. So selling a far out of the money call is fine. The problem is that the trade above will show a loss if Tesla goes up to 1,000. It may trade at $3 to $4 before it expires worthless. On the put side, we were selling puts for $64 that are now trading at $13. That's just how it goes. You need to be able to ride out the volatility. So there is a position on Tesla where it shows like a $5,000 gain. S&P up 13, VIX and VVIX down 1.5%. S&P up 20, Tesla up 60. Good day for us. Shop up, so the trade from yesterday is going well. Sorry, my fingers are sweating because I'm in a sauna. And it's a little bit, I might have to wipe the screen. I'll try to pause it. April 14th. So here I rolled in this position from July to June. I increased the strike from 510 to 540. I decreased the expiration by about a month, and then I financed that by selling a May 7th 575 put option, and I collected $112. Small adjustment. Rolled the June to July and financed it with the May 7th new position, picked up $112. That may be my last Tesla adjustment with 23 days. Within 23 days, I have almost all of the positions expiring. After 23 days, I only have 2 put contracts, so I'll either let those expire or close them out. We'll see. Volatility is up slightly. The market seems a little overbought. I'll monitor it throughout the day for a decent entry. The Tesla trade earlier was an adjustment. If I didn't have the existing July 510, then I wouldn't have made that trade. Regarding new opening trades, I'll continue to monitor. I was a bit too early with the Tesla trade, not a big deal, but I left money on the table. New opening trade on Fiverr, B grade, S&P down 17, volatility was up. Amazon and Tesla are down. April 15th, decent opening. Tesla, Fiverr, Square, Zoom, Melly, Shop, Airbnb. Only Airbnb is down at the moment. I'll keep an eye on it and wait new opportunities. I don't want to make a new trade now because yesterday I was too early on Tesla, and I want to ensure that today isn't a continuation of yesterday's fall. So I waited about an hour and a half. Got a decent trade on Airbnb, high B grade. S&P up 46, volatility is down. We have a bunch of Amazon positions expiring today. We'll probably have to start becoming much more aggressive due to decreasing volatility. I don't think we've had a losing trade in over a year, but even so, we will have to be more aggressive since volatility is also lower than it's been in over a year. New opening trade, B plus grade. New opening trade, B grade. New opening trade, high B grade. I have a lot of Amazon trades expiring worthless today, so I want to start replacing them. Picked up $555. I definitely should have done that trade larger. As a spread, I'd buy the 2500. I'd sell the 2580 or perhaps a more aggressive strike like the 2650 and buy a strike about $80 to $100 lower. This just filled. Closing trade for Tesla calls, close for around a 50% profit. Original was here. So decent day. S&P up 15, VIX down 2.5%, VVIX down around 1%. It was too early with the Fiverr trade. A lot of Amazon positions expiring today for 100% of the credit received. Slow and steady profits. April 19th, new opening trade on Boeing, new opening trade on Tesla. BA is a high B. As a spread, I consider selling the 190 and buying the 170. Tesla's a B plus. As a spread, I sell the 500 and buy the 470. So notice how for the spreads, I'm actually increasing the strike price. When you sell naked, it allows you a little bit more flexibility because you're collecting more premium. So with a naked option, I sold the 450. With a spread, it really wouldn't make sense financially, and I wouldn't collect enough premium by selling the 450 by 400 vertical credit spread. So instead, I'd have to increase the short put strike to 500 and also buy the 450. So you have to be, well, you don't have to, but sometimes I'm a little bit more aggressive with my short put strike with a spread in order to compensate for the premium that I pay when buying the long put. So as a spread, I'd sell the 500 and buy the 470, so not the 450. I'll expand the, so again, just to be clear, I sold the naked 450. If I was going to do it as a spread, I would sell the 500 and I'd buy the 470. I'll expand the Tesla position if it continues to fall, but I wanted to enter with a conservative strike just to be involved since it is a decent amount of available premium. VIX up 5%. Closing trade for Tesla. The market looks weak, and VIX and VVIX are both spiking, so I want to reduce risk. So I wanted to, I think I can get a better entry. We'll try to re-enter it later. Boeing, this just filled. Ignore the date on the left. That's when it was entered as a limit order. It's a closing order. That's the original, 47 cents. So bought back for around 50% profit. S&P down 22. That's actually a large volatility increase for the S&P, only down 22. I'm currently monitoring Tesla, Fiverr, Square, Zoom, Melly, Shop, Airbnb, Boeing, Uber, and Spot. Shop, Uber, Square, and Spot are the best opportunities. April 20th, new opening trade, B+. As a spread, I would sell the 190 and buy the 170. So same thing here. Sold the naked, the 175 as a spread. I'm increasing the short put strike for 190 and buying the 170. Remember that we still have BA positions from yesterday that we opened as well. Airbnb, 97. So sold it for $97 or 97 cents. New opening trade. I wouldn't mind doing it. I wouldn't do it as a spread. It's a B plus grade. So it's just simply not enough premium to do it as a spread. This Friday, we have the Tesla 550 puts expiring worthless and also the 2700 by 2650 Amazon spread. I was a little too early with Boeing and Airbnb. Yeah, I tend to be a little bit too early. I need to be more relaxed and trade later in the day. Amazon is down 30. The best thing to do is to wait for a good entry. New opening trade for Uber, 47 cents, B plus grade. S&P down 28. VIX up 8%. VVIX up 4.5%. Amazon down 37, but Tesla was up a little bit. 21st, the market is down a bit. VIX is up again. Airbnb and Spot are good opportunities, but it's best to wait until later in the day. I'm trying to get this to fill, but these lower liquidity underlyings are tough. Sometimes the bid-ask spread is wide, and there's not much volume. So sometimes I have to guess a potential fill price. Yeah, that's true. I try to fill it at 120, but it didn't fill. Around 80 cents is the lowest I'll accept, so I submitted a limit order to see if it'll fill. Good day for us, but I'm trying to open new trades on Netflix and Spot. Netflix bothers me because there's nothing that says it can't drop a lot tomorrow too. On Spot, it's just not enough premium. I try to push this through, but even that didn't fill. It's not worth it to go any lower. So good day for us. The S&P was up 38. Volatility fell. S&P down 8. Volatility is flat. Tesla's up 6. New opening trade in Shopify. Probably should have traded it larger. New opening trade in Netflix, B plus grade. Will expand if Netflix continues to fall. This is an opening trade too. So I did that as a spread. As a spread, I'd probably sell the 400 to collect more premium instead of the 370, and then buy the 360. That's actually not a lot of premium either, around 40 cents. So the 420 and 380 is likely something I do if it were a spread. I mean, so I'd have to increase the short put strike by $50 if I was doing it a spread. That's a trade-off for sure. Here you're selling a spread with a naked option with a strike of 370, and if you want to collect something comparable, you know, here it says $52, here it's pretty $51. You're gonna have to increase your short put strike by $50. I mean, you're giving up a lot of safety net by doing that. I'm not sure which one is better. I'm just saying, in this specific situation, I thought that the naked option was better because even if Netflix falls like $70, in the worst case scenario, I can roll it forward by like 2 months, and then I can get this 370 put all the way below 300. In which case, you know, I wouldn't even mind accepting ownership of it and then just selling calls on it and running the wheel on it. So it's really not the end of the world. Like in the worst case, if I and plus, I mean, I can sell calls against it to even get the strike price down, probably to around like the 250 level. In which case, I wouldn't even mind owning it because if I accept ownership of it, then there would be tremendous upside potential. So, you know, really, how you trade, how you structure it, it's all about risk mitigation, and it's your decision. Really, as long as you're selling premium with the primary focus of eliminating tail risk and eliminating those enormous volatility expansion events that happen about once a year. One issue I have now is that I have small positions in a lot of different underlyings. In general, I prefer to be more concentrated. Yeah, I mean, you guys saw where just like 2 weeks ago, I had positions only in Amazon and Tesla. Now I have positions on in a lot. I have positions on in like 7 underlyings. S&P down 20. If the market falls today, that will be the 3rd out of 4 days. I had to pause the video, and I'm not exactly sure on where I left off, so I might repeat myself. Bad day for the market. VIX up almost 8%. Decent day for us. None of our positions are challenged, and we have large safety nets. So if the market continues to fall to pull back, we're positioned well to profit from the elevated premium. I wouldn't recommend entering anything right now. It's best to see how the market opens tomorrow and how it trades. S&P down 38. Volatility is up significantly. Amazon down 53 and Tesla down over 3%. I'm really interested to see how the market acts tomorrow. Recently, the market's been weak. We've done fine because we've been conservative, but we can also handle a large pullback and make money from it since we are well positioned. Okay. S&P is up 10. Volatility is down a little bit. Let's wait until later in the day and we'll try to open some new trades. Tesla and Amazon positions expiring today for large gains. Netflix, new opening trade, B plus grade. I'm probably trading it too small, but I want Netflix to fall more and then I'll expand it. As a spread, I'd sell the 420 and buy the 380. Actually, I like that trade more. I should have done it as a spread. Tesla, new opening trade, B plus as a spread. I'd sell the 520 and buy the 470. So I picked up here around $760. S&P up 45. VIX and VVIX are both down 7%. This has been a great week for us. The market has been very volatile this week. It was down 3 out of the 5 days. However, 2 of the days that it was up a large amount. All right, 26, very good opening. Amazon, Tesla up. Actually, every one of our positions is up except for Netflix. I heard that Musk was going to host SNL. Netflix, new opening position. High B grade as a spread. I'd sell a higher put, 425 by 395. Melly, did that as a spread. Picked up $90. Never traded Melly before. High B grade, I was thinking of being more aggressive and selling the 1200, but it's okay. I'm more comfortable with the strike. Uber, close it out. Bought it back for 19 cents, sold it for 49 cents. Decent profit and low stress. Tesla, new opening position. 600 by 550. That was just an earnings play. But it's an earnings trade. Likely close out tomorrow. Here's what I said about it. Here you can read my thoughts. The 27th. Closing trade, original is here. So about 50%. Tesla, closing trade. The original was part of the roll. So yesterday's trade, close it out for 26 cents. And yesterday, the day prior, we sold it for 64. Closed for a nice profit due to the volatility contraction after the earnings announcement. This is actually a very good situation because Tesla is down quite a lot, but it's within the expected move. So there was a large volatility contraction, yet it still provides an opportunity for us to open new positions in Tesla later today. Hopefully it continues to fall. Many people who are long Tesla stock are losing money today since it's down 30. But option sellers are making money as long as they weren't too aggressive with their strike selection. Sold an Amazon call, picked up almost $300. It didn't use any additional buying power. New opening trade on Tesla, picked up $600. As a spread, I'd be more aggressive and sell the 480 and buy the 400. New opening trade on Shopify, high B grade. As a spread, I'd be more aggressive and sell a short put that's $80 higher. Shopify, closing trade. So sold for 95 cents, bought back for 25 cents, kept 70% of the profit. Closing trade, original is below. Kept 75% of the profit, sold for $200, bought back for 50. New opening trade, B plus grade, fill for $1.08. New opening trade, B plus grade. This just filled, closing trade. The original is there, kept over 50% of the profit. Closing trade on Amazon. So sold it for $267. So about $800, made about $740 of profit on that trade. Tesla, new opening trade, B plus grade. Picked up around $700 there. S&P down 3.5%. And volatility was mixed. April 29th, Airbnb. Closing trade, original is there. Amazon reports earnings after the market closes today. New opening trade, B grade. As a spread, I'd be more aggressive and choose to strike this $20 higher. PayPal, new opening trade, B plus grade. New opening trade, B plus grade. Here's a new opening trade for Uber. High B plus grade. Tesla down 3.5%. Volatility up 9%. Square, new opening trade, high B grade, will likely close out early. Amazon up $115 after earnings. S&P up 28, volatility up. Amazon calls, close that out. So made about $200 there, 70% profit. I should have said about a close lower price, so instead of 75 cents, I probably could have closed it at around 45 cents. Yeah, the market price is 35 cents, I think. When setting the buy to close price, it's just setting a price that I would accept to close the position, so it is what it is. Good trade nonetheless. B plus grade for PayPal, new opening trade. Closing trade for Amazon. Here's the original. Sold for $526, bought back for $15. Needless to say, I should have traded it much larger. Shopify is 15. It's a B plus grade. Sold for $1.15. S&P down 30. Volatility is up. And then today, S&P up 20. Amazon down 18. Tesla down 12. New opening trade in Airbnb, B plus grade. Fiverr, Melly, Square, and Uber have earnings this week, so we should be able to close out those positions after earnings. I'm very surprised the volatility is down. Many market leaders are down significantly. New opening, this is actually a roll. I rolled the 25.80 to 27.60 and picked up $160. I probably should have rolled in the expiration as well to May 21st, but then that would have significantly ate into the premium received. I probably would have received, I don't know, 30 or 40 cents a premium, and then it might not have been worth it. S&P up 11, volatility down slightly. Amazon down 2.3%, Tesla down 3.5%, Shop down 5%. So these are all the alerts to the present day. You can join the 7-day trial. It's only $19. You can enroll at BestStockStrategy.com. That's BestStockStrategy.com/memberships. So again, if you want to enroll, you can go to BestStockStrategy.com/memberships. That is BestStockStrategy.com/memberships.